Everybody, it's Pete. Welcome to Stock Trading Pro and welcome to Stocks for Breakfast, where we kick off the market and give you something to do for this entire week. I got to give you a big heads up on what we're going to talk about today. One side of the market is going to be screwed this week. There's really no other way to put it. The market is at such a big inflection point right now where we are one push away from all-time highs if we have a good week, which is crazy to talk about. And we also have this big economic data coming out this week, which is dramatically going to affect what the FOMC does and interest rates. I believe it's coming up in about 10 days from now. So it's a really interesting moment. And we got a big game plan for you. We're going to go through the market. We're going to go through sector rotation. We're going to go through some internals, some market internals to discuss, are we getting less bearish and about to become more bullish? All of this happening without the big Magnificent Seven stocks really doing much at all. Meta has been kind of dancing right around 300. Microsoft's actually close to a breakout. And we're still grinding higher with Apple getting absolutely crushed on some news out of China last week. So the biggest stock in the market, not participating at all. A whole different sector. Two, actually, if we really want to get into it. Maybe even four if you want to throw in oil and gas in there in a little bit. But we're going to talk about two different pockets of opportunity in technology stocks that are not those most popular stocks that we all know. Man, we got a lot to talk about today. So stick around. I'll be back in just 1 second, okay? Okay, so obviously, thank you so much for joining me here today. I want to kick it right off. I want to get right into the meat and potatoes of what we're going to talk about here today. So I just want to start to bring this over. Let me share the screen and break this all down for you. So we're actually going to first start out with the economic data that's actually coming out this week, right? So the Fed, interest rates, mortgages, right, everything, CPI data here on Wednesday and Thursday. That's the big thing we want to keep an eye on coming out, right? And obviously jobless claims. Now, here's the thing that a lot of people make the mistake of. That's great, right? We know the news is coming out, but what do we actually do about it? So now we're talking about Wednesday and Thursday have the bigger economic data, that's the stuff that could rock the market in one way or the other. And right now, when I talk about one side of the market is screwed, I just want to point out what that looks like as well, okay? So we're going to head on over here to the S&P 500. And obviously, we had this really beautiful rally that happened in May, confirmed move to the downside in August. And this level right here is the level that I want to point out. This moment right here in time is where this uptrend became a confirmed downtrend. And then this day over here kind of validated that. It was massive volume, right? So you, me, everybody talking about that spot. We're like, okay, we're in a confirmed move in the other side. Maybe we're going to start to hedge a little bit on the short side of the market, maybe a little bit of two-way trading. Market's going down. Michael Burry's got his big bearish bet on the stock market, and we just got validation, right? No, the buyers step back up, and they are defying the recessionary talk that's going on in the market. So here's the big thing, and this is probably the lesson for 2023. There is a massive difference between macroeconomic data and how that affects the business cycle and all the stuff that goes on in the market from reading the order flow and reading the tape. Now, I just want to say this in the most respectful way. When you are just simply paying attention as opposed to predicting, the stock market becomes infinitely easier. And I can tell you straight up, August was a little bit of a tough month. I just want to be clear about that, I think, for everybody, right? And let's actually take a look at that data as well. So if we kind of work our way over into sector rotation, you can clearly see that August pretty much neutral at best. Last week was a big bowl of oatmeal, really nothing going on, kind of getting bailed out by the end of the last week of August. So what I want to get across here is macroeconomic stuff. We just talked about the Fed. We just talked about interest rates. We talked about the CPI coming out Wednesday and Thursday and unemployment coming out on Thursday. Those are long-term macroeconomic conditions or metrics, for lack of a better way of putting it. And that's great, right? It's fantastic to know what's going on in the big picture. But if you're like me and a lot of other people in my community, we're looking to make money now. We're looking to add to our bottom line every single month and see our account grow like this, slowly, steadily, but always moving in the right direction. When you have a what might be called a top-down approach, where you're looking at the market, determining what the market's doing, and then you're finding sectors, industry groups, and stocks that match the market at that moment. It's quite easy to be on the right side of the market. And that's really step number one if we're going to be a active participant and managing a self-directed account. Again, we talk about it all the time. Congratulations, you hired yourself as a money manager, right? So in our community, we pretty much have been in a perpetual bull market, really, because as long as the market is active and there's earnings coming out, which we've actually been having now, and you combine that with sector rotation, I hate to quote Jim Cramer, but there's always a bull market, right? Not necessarily always, but if you have a process of finding ideas that are bullish right now, and let's just face it, most people are long only. They like to buy instead, and they're not looking at the other side of the market. Completely okay. If you understand how to map that out, something that we talk about often, when you have the map, you're no longer lost, right? There has been some amazing opportunities, even during August when the market was tough, and that was in energy. Energy stocks have been in a pretty solid bull market for a while. There's been two sectors, energy and I'm losing my mind here, energy and technology. Technology's actually been at the top of the list, and I want to show you what that looks like in a second here. The whole point that I'm making out here is, and you can actually see here at the top of the list, energy and technology stocks 1 and 2, and financials are kind of creeping up there right now as well. So that's a lot, right? So I want to help you map out the entire week. So Wednesday is when the economic data comes out, and it's going to create a short-term spike in one way or the other. You combine that with what's going on in the market right now, specifically the S&P 500. There's massive price discovery going on in the market right now. Price discovery is essentially a prop trader term where buyers or sellers are kind of duking it out at a particular level to determine whether or not somebody's going to come out as the winner. Right now, the bigger picture of the market, and we'll actually take a look at the chart right now. Right now, the bigger picture of the market and the S&P right here, where we confirm this new bearish move, continues to dance right around this 444 to 446 level. So we have August bearish, 3 weeks of buying. Let's be super clear about this right now. You can't deny we're not seeing higher lows and higher highs, which puts us one new push into potentially hitting new all-time highs. So we have longer term 2023, amazing. August, profit taking. And now since, let's say, the middle part of August, on this reversal, and these two candles reversing, we now have a conundrum. We have all of these negative headlines talking about recession and Michael Burry's right and we're going down, right? But the market's going up right now. So this is really where we start to separate ourselves from everybody else who says that you can't make money in this market. So let's actually bring this out now. And we're going to actually talk about what this means for position sizing. And this is a really big lesson that I don't care if you make one trade a year or one trade a week. It doesn't make a difference. Certain market conditions call for increased initial position size, and maybe you would get in there with a little bit extra buying power, right? And again, I just want to be clear about this. I'm not a financial advisor. I'm a trader. Everything we talk about here is for educational purposes. It's up to you to make that final decision. But if you didn't know, I've been trading for 23 years. I had a trading firm in New York City. And one of the biggest keys to understanding how to have long-term growth in your account is, number one, to be in the right stocks. Stock selection is critical. And we're going to go over stock selection right now, okay? The second part is when you have that roadmap for the market. And I'm going to go over the roadmap right now as well. When you have the roadmap, there's certain market conditions where it's wide open and it's beautiful. Those are the instances that you need to make that distinction, and you would have a little bit more initial money into the deal because everything is obvious and there's room to go, and there's a likelihood that you're going to hit that profit target. Then you have other conditions, kind of like we're in right now, where it's not super obvious. We're kind of on the precipice of, are we in a bull market? Are we not in a bull market? Are we starting to head down? Like when you have that kind of indecision, smart traders will reduce their initial exposure and not add to those positions until you get a little bit more positive feedback from the market, which basically means it pushed and paused in the direction of your idea. Right now, we are in that little bit of a lower initial position size simply because of where the market is. And nobody really knows right now, are we heading into a recession, or is 2023 just going to be one for the record books where everybody's looking in one direction and we just keep floating in that direction? What's more important to you? Well, what time frame are you trading on? Are you planning to hold the trade for the most immediate price action and stick with it as long as your tape reading ability tells you it's still valid? Which right now, again, if we take a look at the market, we're slowly drifting higher. So this 444 to 446 level is important. So here's the breakdown, right? This is actually the map. This is the map starting with the market, going into options a little bit, going into sector rotation, industry groups, and then all the way down into an individual stock that I happen to be watching heading into today. And by the way, we actually have if you want to get all of this research every single day, the depth of everything that we're doing, there's actually a link below in the description. It's called the Daily Ticker Plus, which is where you kind of go behind the scenes and you get my picks every single day from start to finish. You get all my breakdowns and everything. So we're obviously giving you a sneak peek of this every single Monday, helping you get started on this. But if you want the whole thing, at the very least, click the link in the description and find out what it's all about. It's a 90-day package, $297 for 90 days with 100% money back guarantee after 30 days if you're not absolutely thrilled. So if you want to take this a little bit further, obviously click that link. I'd love to see you on the other side. So here's what we're looking at in game planning for the week. Definitely a two-sided story to the market right now. So I want to be clear about this. We are literally starting out talking about the fact that the market is not obvious. So that should immediately tell you that I need to lower my initial exposure until that picture gets a little bit more clear. Now that's the big picture of the market. Now we're gonna move our way up to sector rotation, industry groups, and then an individual stock pick within one of those strongest sectors. But you need to set the tone. When you look at the market, and I'm going to actually show you how to do that. When you look at the market, you need to have an understanding of what kind of roadmap, what kind of environment am I in right now, and what does that mean for the kind of risk I should expose myself to in exchange for the likely profit. Now, we get back to this. We're talking about a two-sided market, which means that it's not incredibly obvious right now. We're kind of like we talk about, we're on that inflection point. So what does that look like? Well, we start out with the S&P 500 over the last 5 days. Very, very mixed picture. So you put this in here where the majority of the S&P 500 is mixed, if not bearish. And then you add on top of that what the market is actually doing, where we're showing higher lows and higher highs. And we're actually up again this morning. And we've separated, you notice now, we've separated from this price of 446. And we're actually 447.5. Obviously, pre-market, a lot of stuff going on still, right? All right. The earnings season has been anything but spectacular, but we are continuing to grind higher. And I'm going to show you the two hottest sectors in a second. But spectacular at the same time, the S&P is one quick move from all-time highs. Mind-blowing, right? And this sounds exactly like the conversation we had in late February when everybody was talking about recession. And we're kind of hanging out over, not late February, over here in March. We're like, this is crazy. We're actually one move from all-time highs, and we're not that far from doing that again. Again, pay attention. Don't ever predict. And this is a big thing that I want to get across here as well. If you are afraid of what's going to happen next, that means you're predicting, and it means you're not trading from an edge. Remember, an edge, a trading strategy should first be built on whether or not it's likely to follow through. So many people make the mistake where they go and look for the entry first, but the entry setup without the edge in front of it is going to leave you hesitating, doubting, and not having conviction. So if you're lacking conviction right now in any of your ideas, you probably have the sequence backwards, where you're probably first running scans looking for entries, and you're not determining whether or not those stocks have stacked order flow, which means that they have institutional attention first. Remember, the reason we would choose to accept risk, and I keep saying it that way because it's very important, you need to ask yourself, why would I put my money in harm's way? Why would I accept risk on an idea? And the only reason you would do that is because you're good at building an argument for why that thing should hit your profit target versus your stop loss. So we've already kind of cemented the fact that we got a lot of stuff going on right now. So what does that mean from an initial risk perspective? Unless you're in one of the hottest sectors right now for the majority of the ideas, we've kind of lowered that a little bit. We've lowered the initial exposure looking for a new move. Just to give you a little bit more of granularity or clarity on what that means. So maybe you might intend to build a position in two pieces. So let's just say, for argument's sake, you plan on getting 500 shares of stock. Normal market conditions, normal good bull market conditions, maybe you'll do position one and then have a plan where you're going to add position two. The current market conditions, maybe you still want that same 500 shares, but because we are a little bit more indecisive and big economic data coming out this week, instead of doing it in two positions, what I would normally do is do it in three. So I would have less initial position size on the first one, but if the stock does what I expect it to, then I have planned places to add to that position. If it doesn't work out, even though it's a good idea, I have less initial risk. If it does work out, I have a plan to build up to that position. And this is, again, this is a part of what I do every single day for everybody. I give everybody the entry, the stop loss, the add share position, and the initial profit target. And then when we get to the initial profit target, we kind of switch over to something that we call the difference maker, which is the profit maximizer. The profit maximizer is where you learn in a very, very step-by-step way how to hold on to your winning trades so that you have big wins with big margins so big that you kind of wipe out all those annoying small losses. Now, again, obviously a little bit tougher in August, but we're going to show you where those wins actually were. So we're going to kind of keep breaking this down. If this has your head spinning, you're not alone, right? Obviously. So really the right thing to do right now is make sure you manage risk. Again, this is professional level thinking. Even if you have a full-time job, it doesn't make a difference. Manage risk until we start to have directional volatility. Now we do have this slow grind higher, right? To make matters even more confusing, the S&P 500 is now showing higher highs and higher lows after the last 4 weeks. That's a long time, 4 weeks, right? But the reality is we need to get separation from this 446 to 447 level before we can have conviction in a bigger move. So think about this. What are we actually doing right now? We are mapping out what we need to see before we step up and put more money into a trade. Let that sink in for a second, because if you are stressed out of your mind on the market right now, maybe in your positions, it really means you just need to take a step back and say, what's the right risk for this moment? Do I have too much? Am I in the right sectors? Am I in the right industry groups? Or am I just hoping the market goes up? If you've gotten to that point where you can't sleep, the smarter move is maybe pulling that back a little bit until the market gets a little bit more conviction, which again is separate in the S&P 500 from 446, which it seems to be right now. We are a little bit above that level. Okay, so let's continue to map out looking at the week. To give it a label, which everybody loves to have, we are neutral at best, despite the recent rally. I know quite a few places are saying we're in a confirmed uptrend, and technically, again, we're all the way up there, right? I would say that's correct, but for those of us trading every day, conviction is not exactly near a 10 right now. And you can actually see here, if we look at the difference between the advanced decline line, we are getting less bearish. And you can see the little spot over there, but not quite yet bullish. Remember, less bearish is not bullish. So we're kind of stacking the reasons that we're looking at these ideas, right? So something that's interesting in the internal, specifically the advanced decline, is moving. I'll give you a little bit more of a detailed look on that as well. Let me kind of zoom in over here and work our way over here. So you can see the advanced decline line. You can see the difference between the high lows. They're still pretty much pushed to the downside, although Friday was actually reasonable. And now you can actually see the breakout levels are still bearish, but moving up. So does that mean that we now just start buying? No, it means that the signals for aggressive selling have slowed down. There's a difference between less bearish and we are bullish. It's kind of like when I want to lose weight, I want to be less fat versus I want to be healthy and fit. They sound like the same thing, but they're not. We're not quite bullish yet. So if you happen to be on the short side of the market, you really got to be aware of this inflection point that the market's in right now and have in place new opportunities to either get out of those short sales, because you can get a pretty fast short squeeze on those, or just move your trailing stop loss in a different direction. Okay. So if we continue to move over and how we're game planning for the week, the pockets of opportunity looking right now are in technology as the sector continues to dominate the amount of stocks showing stacked order flow. So I want to show you what that means right now. So remember, this doesn't take a long time. And obviously I'm doing all of this for you if you happen to be in our community, but I want to give you now a sample of how it's easier to find stocks in play, right? Find the stocks that are moving now. If you're struggling right now, it's probably stock selection and timing that you're missing. It's not a question of whether or not you want to place a trade. You obviously have an account. It's probably stock selection and timing. So if we start to now look over into the other picture of the market, this is actually a list of curated stocks that meet our stacked order flow criteria. There's like 29 different data points that we look at. And now take a look at the last week in technology. Technology by far has the most stocks that are in play right now, and two very specific sectors, software application and software infrastructure, are dominating. Now, what's interesting here is you're not seeing any of the big dogs in here at all. These are Oracle, which, by the way, Oracle is scheduled to report today. Let's take a look at that here. Oracle is scheduled to report after hours today, and Oracle is actually resting at or near all-time highs, like pretty much right on the button there, right? Look at that. So Oracle heading into all-time highs. Again, recession, stock market's going down. That's not what stocks are showing right now. So let's, again, reading the order flow, reading the tape versus reading the headlines. And I want to give you a little bit of a heads up of something that we talk about a lot in our community, especially on our coaching calls. Headlines are put out there to get you to click on them. They're good to give you ideas of stocks that should have institutional attention, stocks that should have volatility, stocks that should have volume, right? But ultimately, good traders will use that headline and that volatility as a reason to put it in their list. But then you still need kind of like a filter to put over that, which is your trading strategy. And obviously ours is the New York method, right? We have order flow, stacking, tape reading, the optimal entry, and the profit maximizer. So regardless of why a stock is going into the list, we're then putting those stocks into our framework. So when you have a headline, you still need to have an edge that tells you if it's a tradable opportunity at that moment. So if you're kind of chasing headlines, bing, 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 all over the place with headlines, but not making any money, it just means you need to be a little bit more specific on how you're looking at that with that new volatility. So I want to be super clear about that. Okay. So let's continue into the game plan for the week. All right. Two specific industry groups within technology: software applications and software infrastructure. And that's the list I just showed you. So if you want to take a quick snapshot of this, this is our proprietary data in there, but you can actually grab that and take a look at some of the stocks. CRWD is actually having a pretty good week. We're going to break this down for you in a little bit more detail. Okay. Oracle's scheduled to report. So we just talked about that. Energy stocks right now at the top of the list, with technology, with crude oil inventories apparently shrinking, which should be good for longer term moves in those stocks. So again, where are we looking for money? Energy, right? Energy, specifically oil and gas, E&P. Energy refining is actually popping up a little bit this week as well. If you take a look at stocks like VLO and a few of those kind of stocks, actually at or near breakout levels right now as well. So again, it's not hard to go through the power pyramid. And again, you could actually see how we do it here every day. The market, options, sector rotation, industry groups, all the way down to swing trades. So the biggest thing that I want to get across here, which is really important, having structure. If the market is beating you up, you're overwhelmed and confused, doubting yourself, and you have hesitation, it just means that you need to spend a little bit of time on the weekend, get out your notebook and say, what do I actually do? And how do I know if a stock is strong? And how do I know if it's changed? Answer those two simple questions, and all that stress in the market goes away. The only thing you need to learn how to do after that is hold your good trades longer, assuming you kick out the losers when you're supposed to. All right. I want to make sure we continue here. There's a couple of big stories as well. Tesla, which obviously has been pausing for the last few days, got an upgrade from Morgan Stanley, talking more about supercomputer and the AI boost. So this is a fantastic example of what we're talking about with putting it into context. You can clearly see here, Tesla really hasn't moved for the last 5 to 7 days. And now it's up 6% this morning. And if we kind of zoom this all the way over here, it's kind of like right there. It's outside of this box right now. So this is really where the people in charge of their trading account from everybody else separate themselves. So now you have Tesla coming out. You have a catalyst coming out. It's pushing it up. It's finally getting outside of this 2-week trading range. You now need to have structure to say, how do I know if that pre-market buying and that story is still valid? So if you go back to what I said before about, the way that we do things, there's two parts of every trade, and something that you really need to understand. And I just kind of really figured out a way to say this recently. What got you to the trade is not the same system that will get you paid. You got to remember those two things. There's certain things you look at to find an idea. That's the first half of the trade. So what we call that order flow stacking and tape reading. Is it obvious? Is it still valid? But then the back half of the trade, the second part of the trade, the optimal entry and the profit maximizer, is how you actually get paid. So just remember, you want to write that down. And I don't mean to sound like Johnny Cochran or anything like that, where if it fits, you must have quit or whatever the heck he said. But what got you to the trade is not what will get you paid. The second part of the equation is getting paid. So we have now Tesla bouncing up here because of a news story. So now you need to shift and put the second part of your trading strategy in place to say, is it still valid? How do I know it's still valid? How do I know when it changed? If it's still valid, what do I do? Very important. Well, we in our community obviously have one very specific price that we use for that, but I want to give you some feedback on how to take advantage of it. This is not necessarily get in there and buy it just because of the news. Great, supercomputer, great. Tesla threw AI on there, right? But you can also make an argument that Tesla margins are going down every quarter. So there's two sides to that, right? Which is why it's going sideways. Use your second part of your strategy, the part where you get paid, to put that as a filter over what Tesla's doing this morning, as opposed to just jumping in there and buying because it's in the news. All right. So let's continue to move forward. That's obviously the news on Tesla. All right. The option markets, right? The option markets right now are probably a little bit more of a two-sided trade. And this is really one of the biggest things that separates options from stocks, which is even during these sideways types of moves, you can make money in options by having spreads and all that kind of stuff. So John actually breaking that down. And again, if you want, you could actually pause this. I'll go through this. There's no conviction here yet. Even though we are making higher lows here, there's no conviction. Kind of in that same exact spot right here, right? So kind of working our way over. The bearish tilt has me telling my traders to begin thinking about adding more bearish names to your list. So what John is doing right now is he's talking about a two-sided market, which means that you could be trading both sides with a little bit more conviction. Last year, when the market was just straight up, 2021, when the market was kind of straight up bullish, there was no reason to look at shorts. 2022 and kind of what we're having right now kind of going sideways, it's a little bit more both sides of the market. So I want to kind of fast forward here. I'll go through this. If you want to pause the video and you can read all of John's research in here where he's getting a lot more into some of the ideas. Again, you might have to watch the video more than once and you can see a stock in energy. I want to get down to the ideas, the bigger picture of the ideas right now. Right here, we start out with sector rotation. So technology shows the largest number of stocks with stacked order flow by far. And I just showed you what that looks like over here, right? This entire box, which is a third of all the stocks that meet stacked order flow are in technology right now. All right. Even Intel got into the act last week with a solid breakout. So Intel's obviously going to be one that I'm going to be keeping an eye on this week. Oracle, we've already discussed, right? So what we're actually doing now is we're migrating over to what you might call the right stocks, the ones that already have stacked order flow, the ones that are already looking pretty solid this week. Dell mentioned several times last week, continues to hold the earnings gap and is now paused for 5 days. So you probably heard me say this a lot, a push and a pause, right? So the chart of Dell now, since the earnings gap has now paused for 5 days, and you got a little bit of an ascending wedge there and a reasonably priced stock. Looks like it's right around $70. IONQ shows solid order flow since August 18th. And we'll take a look at that chart, which began with the bullish U-turn. I'll show you what that looks like in a second. What I like about lower price stock are the energy candles. Now, this is really important. Energy candlesticks means that there's a big difference between the open and the close. Basically, a big green or a big red candle, right? It's a subtle distinction, but you don't normally see them in lower price stocks. It means that there's attention on the stock from start to finish, a subtle distinction, but an important one. So a $20 breakout is on the table after Friday's well-bid candlestick that closed near the high. So here's what we're looking for. So this candle right here is the bullish U-turn that started this nice move. Bullish well-bid candle on Friday and sitting right near the $20 breakout. AFRM also stepped on the gas after earnings, finally got above 20. Now this is what we might call a two-step trade. First trade is a breakout of this pause. Got a little bit of resistance here, not too much further higher, and then the bigger move there. So if you remember a couple of minutes ago, maybe 10 minutes ago, where I said smart traders get feedback from the market and determine what that means for how they're going to plan to build that position, especially if you're carrying overnight positions, which we know is swing trades or position trades, right? So AFRM has been really, really strong since earnings. It's pausing now, but it's got a little bit of an overhead resistance, what you might call a minor resistance. So this is where you got to go into the idea and say, what is the right way for me to get my position? Do you go in there with all of your shares? And again, it's a relatively inexpensive stock, so that could be tempting. But because it's got overhead resistance, what I would be doing and what I talk to everybody in the community about is we plan how we're going to build into that position, and probably in this case in 2 steps, with that next resistance level not too far. And if it gets through that resistance level, then we look to add, and we have an exact spot that we do that, looking for the next level, which is, I believe, around 40 something up here, which you can see the next level all the way up there. Okay. Other tech stocks making the Monday list include Microsoft. Let's take a look at Microsoft, which is kind of hovering right on that breakout level right here. And this, I love to break these things down. You can see the bearish move in August. You can see where we broke the trend. Once you break the trend, then you have this box. Essentially, it's either going to validate the move to the downside or start a new one. And you can see it closed above the box, which is the break here, right? Again, price discovery, keep it simple. Don't confuse yourself. Make it easy to make a decision. And look how we're following through so far this morning, okay? All right. We also have Zscaler at a quadruple top. We have PANW, which broke the downtrend. We'll take a quick look at PANW there. Again, not complicated. You just need to have the framework. You need to have that model to put over the market. And they're actually up a little bit this morning as well. Working our way down into some other ideas. CRWD through a triple top in, I believe it's the 160 level, if I'm not mistaken. It's CRWD. So you can see here, one earnings report got up to that level. Another earnings report finally punched it through that level. CRWD has some room to go as well. You can see where the next level is up there. And here's another list of other stocks that are pausing in tech right now as well. Okay. For the market getting plenty of recession talk, it's a little surprising how many stocks are pausing for new breakouts. Consumer cyclical also joined the party. Airbnb flew off of getting added to the S&P 500. Lulu reported and exploded. And here's the nice pause. Look at the lighter volume on that Lulu trade. That's technically exactly what you want to see during a pause, right? WSM posted a huge energy candlestick, Williams-Sonoma, after reporting, and so far the stock is holding the bid. The chart shows a healthy $20 until the next resistance level. So you're starting to see how having the map is more important than the ability to forecast. Look at the room to go here in this trade here as well. Okay, so I just want to repeat what I just said because it's really important. Having a roadmap for the market that gives you conviction is the thing you should be striving for. Stop trying to predict, stop trying to forecast, stop trying to figure out where it's going 3 weeks from now. The only information we have is all the information up to that moment when we're going to make a trade. Nobody knows what's going to happen after that. But if you're smart, you then have a whole separate different set of rules for how to get paid. There's all of the reasons you want to look at the stock in the first place, and then all the reasons you might consider trading it. What you got to the trade with is not the same decisions that will get you paid. Never forget that. They're 2 separate sets of decisions, okay? So we want to keep working our way through the ideas. Obviously, you can see WSM here. And actually, I put this in here because breakouts kind of get a bad rap. But this is really the quote that we talk about all the time. Real breakouts follow through. Quick loss or a big winner, sign me up. Breakouts are fun because you're typically taking a quick loss or holding on for a big winner. So obviously, we're talking about that in the context of WSM here. Amazon grinded higher since the bullish earnings gap, but last Thursday, the stock posted an energy candle, barely a pullback during the day. These are the kinds of things you need to learn to notice. So I just want to point this out here as well. Now, Amazon has been kind of sitting in this trading range. Long term, it's been pretty good since all the way going back to March. But since it reported, it really has not been able to get out of this range. Matter of fact, there was some selling. We held this longer term move. And if we kind of break this down also using a longer term moving average, you can see that the stock continues to love to hold that 50-period moving average. But here's the big thing that I want to talk about. And these are little subtle distinctions. Look at what the stock did last Thursday. Barely a pullback, right? Even if you're not day trading, it doesn't make a difference. You need to notice those things and then look how it followed through. So right now for me, for Amazon, I'm looking at this big day on volume and Friday's well-bid candlestick to finally punch the stock through 140. So there's really nothing for me to do yet until it gets above 140, which would take it back above the price where it opened on the gap. So this is how I'm actually breaking that down. These little things are the kind of things you need to learn to notice and game plan for. They can change everything. While it's happening inside of that 4-week trading range, these are sneaky signals that you tend to see after the fact, after the stock ignites a new move higher, okay? The level to watch here is 140. A break above that level finally gets the stock out of the range, and then finally looking for a little bit of a move, 145 and then 170, which we kind of mapped out that for you here as well. You can see these two levels, right? Boom, boom. Got to know where the next levels are because that's going to affect your position sizing, okay? I just want to talk about somebody asking here about Disney. Absolutely not. You know what? That's actually a good thing to talk about. So thank you for bringing that up. Remember how we just talked about before about what is happening versus predicting the future, right? Can anybody look at Disney right now? And thank you by this. I want to say thank you for this. I appreciate this because this is a lesson for everybody, right? Can you look at this stock right now and say that somebody is buying this stock hand over fist and I can't wait to join them? No, obviously not, right? So if we're looking to buy Disney right now, we are essentially predicting the future. That is very difficult to do. Right now, as of this moment, with all of the information that we have, Disney is going down. It broke below this monster support level at 85. Look at how big the support level is going back a few years, right? So as of right now, Disney is below a very big level that buyers have been able to hold for the last few years. This is a really important lesson. This is the difference between what information do I have now and trying to predict where it's going to be in the future. We don't live in the future. I don't trade in the future. My community doesn't live in the future. We have very set rules around, is it right now obvious, and can I find a spot to piggyback that move? Right now, looking at Disney is essentially, if you're looking to buy it, you are guessing, predicting, and forecasting the future. We don't have the information yet right now that says this is a good buying opportunity. And again, this is a lesson. This is not about JM777 Martin being right or wrong. That's not the point. And this is what we talk about in our game plan meetings every single morning. This is about what's happening right now and what are the odds, if we choose to accept risk, that is going to happen next. You can't say that in a stock that's going down that it's a good opportunity to be a buyer. You are essentially guessing and hoping it moves in your favor. The easier way to be involved in the market is to find stocks already going in that direction and then piggyback on that with the optimal entry and the profit maximizer. Could Disney go up today? Sure. Is it a good idea to buy? No, not based on the information we have right now. So remember what I said a couple of minutes ago about stock selection. If you are really well educated and you got all the trading books you could possibly think about, if you're still struggling, it's probably stock selection, and you probably don't even realize some of the ideas that you're taking are just maybe not the top of the list of ideas. So I want to give you the roadmap again. So remember, you want to write this down: the market, sectors, industry groups, all the way down to which trades we're actually taking a look at that moment. So you can actually see the way we're breaking everything down. We're breaking it down by what is it doing and what does that mean. This is where trading, dare I say it, becomes fun, because you are no longer predicting. And when you stop predicting, you stop being nervous and you stop being overwhelmed, because when you know what you're looking for, you're no longer lost. That chart of Disney, I understand it. You want to bottom fish. If you get the bottom, it's amazing. But what you're missing out on are some other great ideas already moving in that direction. It could rally. Of course it could rally. But does that make it a good trade right now to be a buyer? Not based on the information that we have right now. Okay. So working our way through, obviously talking about energy stocks, clearly number 2 bullish. A lot of them are a little bit beyond the optimal entry. So as much as they're obvious right now, they're a little bit too far for new ideas. There are a couple of them that look pretty decent. SLB and DVN are in that list right now as well. You can actually see a really nice clean pause there. Industry groups, again, working our way through the sector rotation. In the software infrastructure has been pretty good. Microsoft sitting on the verge of a breakout, which we just showed you, and other stocks in that group as well. CRW, keep an eye on ZS and OKTA as well. And even if you're looking for a little bit of a lower price stock right now as well, AFRM is now pausing for 5 days at that level also. So kind of working our way through, and you can actually see we also have our swing alerts down there, but I can't give those away because that's actually for members on the other side of our community. So just really think about this. If you have to watch this more than once, take notes, take some screenshots. I think it would be a smart thing to do, because we also talked a lot about today about thinking through what is the right kind of risk for the current moment that you're in. It's a very important question to ask, because if right now, if you think every trade's the same, it really just means that you don't have a strategy yet to tell you that this is amazing or this is giving me a headache and why. So when you kind of narrow down what you're looking for, the whole market kind of just clears up, it slows down and becomes easier to interact with. So hopefully you can watch this video more than once. You can actually start from the top, go all the way through and see everything we're looking at and how we're game planning for this week. And then next Monday, we'll actually have another conversation and see how everything has worked out. All right. If we did a good job today, please do me a favor. Make sure you hit that subscribe button and give us a thumbs up. It'll tell me that you like this kind of stuff. If you want to go behind the scenes, like I said, get the Daily Ticker Plus newsletter. We get this every single day, including all of my ideas. And you get a course. There's a couple of really cool ebooks that you get in there on tape reading as well. Click that link below in the description, and you can find out some more about it. All right. Have an awesome week, everybody. I will speak to you soon.